crude oil rallying after Hamas's surprise attack on Israel. The threat of US and Iran entanglement growing, especially if action is taken against Tehran. Sok-Jin weighing in on the market implications, writing this: in terms of risk premium, we see an increase of $5 to $10 per barrel. The risk of escalation is real, and while Iran may not have nuclear weapons, it does have a stranglehold on the Straits of Hormuz, through which 20 to 30% of global crude oil flows. Joining us now, a man who knows a little something about the crude market, Stuart Wallace out of Dubai. Stuart, you and the team, as you look at things right now, have you changed your expectations on crude supply coming out of the region?
Not so far. I mean, it is absolutely true to say they have a stranglehold over Hormuz, but, you know, with the proviso that no one has ever successfully managed to take Hormuz down for any length of time. So you can definitely make life more difficult. But I would also argue in the long term, it's not necessarily in the interest of Iran to do that. I mean, for one thing, just to remind to everyone, you've got the US Fifth Fleet sitting up in Manama, not that far away. Is that really sort of a bear you want to prod? I think the second leg of it, which is tougher sanctions, you know, or at least a more careful control of what's coming out of Iran, you know, that certainly is a possibility. And at a time when OPEC is still constraining supply, that would clearly have a more immediate impact on the market. So I think it's those two factors, but of the two of them, the more likely approach, at least for now, seems to be on the sanctions. But again, we'll watch and wait.
Stuart, how much crude has been coming out of Iran over the last year or so? And has the administration been turning a blind eye to that?
Yeah, I wouldn't necessarily as a blind eye, but yes, it is up sharply, and it's definitely been a big factor in the market. I mean, I think as one of your previous guests said, it's something in the order of about 50% over the last 12 months higher, and the expectation is that that would continue to go higher. Now, clearly the calculus has changed in the last few days, and we're really watching Washington to see how they're going to react to this. Again, that will take several weeks or several months to play out. At the same time, you've got this big calculation to make about how then, in turn, does OPEC react, Saudi Arabia in particular. It's got quite a great deal of spare capacity right now, but it's not quite clear what the appetite in Riyadh is at the moment. In a scenario where Iran is constrained, does Riyadh then reopen the spigots? It's very hard to gauge today what that reaction might be.
Stuart, thank you, sir.